Hello, welcome. Thanks for tuning in. My name is Glymph, from homeless to over 100 doors and $10 million in real estate assets. And today I'm going to share with you my top 5 investment strategies for 2024. So hopefully this brings you some value. Tune on in. And I put these all in order from some of my least favorite to some of the ones that I think are going to be the best investment strategies moving forward in this year's market, possibly in the next 5 to 10 years as well. Number 5 is going to be short-term Airbnb. Now, I think this is a very strong investment strategy, but one of the things that I like to consider with short-term Airbnb is the cost of labor. So you have to pay for the turnover. And so with paying for turnover, there's going to be costs such as cleaning costs, those fees. And so those fees, as time goes on, especially this year, we've seen huge labor increases. I think in Miami, I saw the other day, the average cleaning company in Miami is making up to $100,000 to $150,000, right? So those costs of turning over your Airbnb or your short-term rental, I believe will continue to go up. So that's why this is not one of my best investment strategies. I know some of those costs are passed on to the customer, but there's only so much the customer is going to be willing to pay with, having to pay for that turnover. So, and that also eats into your profit. So, short-term Airbnb, one of my least favorite. Number 4, house hacking. So this is a good strategy if you want to get into real estate investing. And house hacking can mean a myriad of things. But when I talk about house hacking right now, I mean actually buying a home and sharing a room in it. Okay, so you're buying it with the purpose of sharing, or buying a home and having, a duplex attached or a triplex. And so you will rent out one of those other apartment units or just rent out the room. I think this is going to be a great strategy to get you started into real estate. It always has been. I actually started, my first investment was a house hack. I lived in the top floor and rented out the basement level. And that's how I got started my real estate journey. It's a great way if you are starting. So if you may have a basement that might be empty, which could generate some revenue or even lessen your cost of rent or your mortgage. So number 3, the good old tried and true, good old faithful is just long-term rental. People right now in today's market, they want stability, right? So if you can create stability, I think you'll be in really good shape. Stability is going to mean the tenants do not have to move, and tenants don't want to move right now. There is such a cost right now with moving, whether it be, renting a U-Haul, having some buddies even help you, even that cost, new security deposits. There's such a cost that is associated with moving. So having to move is actually a very big task for a lot of people. So if you can go with a long-term rental and use that strategy and try to keep your tenants as long as possible, right? As long as possible. Even this year, we aren't really raising rents as much as we could because we want to make sure that we keep the tenants in there. There's a very expensive cost per turnover. So if you can keep a tenant as long as possible, I think you'll be in great shape long-term to help build stability. And long-term rentals right now, if you're in a great area where people want to be at, long-term is what people need. We see that there is a housing shortage, and we believe that there will continue to be a housing shortage and affordability shortage in the next few years. So if you can do a long-term rental, you'll be in great shape, I think, over the next, not just 2024, but over the next 5 to 10 years. Number 2, pad split or room sharing. Okay, so pad split is really just the host market, kind of like Airbnb is the host market for, short-term rentals. It may be renting out rooms, or, you might live in a room and rent out rooms. But room sharing and pad split are going to be, I think, one of the top investment strategies over these next 3 years. We really have an affordable housing crisis right now in America. And so if you can get to the point of making it more affordable for tenants, I think you'll be able to create long-term tenants in our interim, and it should make you money. We typically see in certain markets that when rooms are shared, certain people are getting upwards of 50 to 60, 70% more on the by room per basis. So if a typical room basis was, let's just say 500 to 700, they may be getting 700 minimum to upwards of 900, even $1,000 per room. And so what this does is it helps people create more affordability. And again, this might just be you finding a roommate, right? That room sharing strategy is going to be one that is going to help people eliminate a lot of the cost of overhead. And in America, we're one of the only countries that really, we don't live with the next generation, or we don't really live with roommates. Typically, that's pretty common in every other country. So in America, we've had it very good here, but as prices start to go up, we start to see higher inflation. Hopefully interest rates will come down. That'll put some ease on it. But we're going to start to see a lot more people sharing rooms, sharing apartments. So I got to interview a guy a couple of weeks ago, and one of the things that he specializes in pad splits, and he does it by, the monthly basis. He has people that want to do it by the quarterly basis. Some people even rent out the whole room for a year. And all he does is he puts a bed in there and he puts a little refrigerator and microwave for them. And they're very happy with that. So they also have areas which are, shared common areas. So, they share the kitchen, they share the living room. But he said he wants to make the living room as minimal attractive because he doesn't want people centering in there, which was a great tactic, I guess. But again, he is making areas more affordable for people. And that, I think, is going to be the biggest thing moving into 2024, 2025, 2026 is affordability. With room sharing as well, there's an opportunity to, bring in new people faster. So if you have people who, let's just say, who are truckers or something who are stopping there for a month, you can bring people in and out. And that gives you the flexibility with rent adjustments as well. So if the market becomes in higher demand, you can bump up your rent faster versus, a long-term tenant where you're kind of in at least for a year to 18 months. So that was kind of advantages that I thought was pretty cool when it came to long-term versus pad split or room sharing. But again, pad split, room sharing are my number two. I think they're great tactics for real estate investing. And finally, number one, affordable housing. I can't stress this enough. There is an affordability crisis in America. So if you can build affordable housing, now that's kind of like an oxymoron right now because the builder cost right now to build new is so expensive, especially with high interest rates. So if you can do affordable housing, this might mean anything from, Section 8 or HUD vouchers. They can mean any of those programs or just having lower costs. You won't have that problem with vacancy or occupancy. Now, and I think over the next few years, and I've started to see it, we start to hear more people talking about Section 8 housing and HUD housing. And I even have some of my portfolio. I think 28% of my portfolio right now is Section 8 and HUD housing. And during COVID, it was great because we got guaranteed rents from the government. And I think as things begin to progress, we'll start to see higher rents. Typically, those Section 8 houses and those HUD houses, the government is actually paying more than market. So that gives you almost an upper hand to make sure that, hey, like I want more than market. How can I get it? You can be best friends with the government and the government is the one who makes the money. So why not be best friends with them? There are caveats, especially, you have to make sure you can pass an inspection, but even the inspections are pretty much what you should have anyway. They only cover really the basis. So a lot of people get a bad rep I've seen for, taking Section 8, but it is a program that was designed to help everyday Americans and everyday struggling people. So I usually like to accept the program, especially if it makes sense for the rental amount. Now, there are programs and Section 8 will only pay up to a certain amount. So if it doesn't make sense, for example, you might have a single family home that might rent for, $3,000, $4,000, but Section 8 may only pay $2,500. It wouldn't really make sense for you to actually rent it to Section 8. You will want to take the market route. But if you do have a house that you're struggling to get a renter in, Section 8 might be a great strategy for you to actually do that. And we talk about this every week on our free Tuesday masterclass, different tactics of how to invest and best strategies on how to invest. So hopefully I can see you there. I'll put a link below and make sure that you click on the link to sign up. If you got value from this, I would love to see you in our free community as well. Click the link below. We talk deeply about these topics and even more, right? We'll talk anything from best investment strategies to even how to get your first investment. And I'll even be there every week. So I'd love to see you in the community. Click the link below for more information.